In the short term, markets have turned risk off, and this is due to the trade war escalation between US and China. Trump has threatened 100% China import tariffs, and this has been met by the worst day in the S&P since April. This does create more economic uncertainty. You have consumers and businesses that are at risk of paying more fees for imports, and then you also have threats to the global supply chain. And so in the short term, this has caused markets to turn risk off, but medium to long term, I think we are heading into risk on market. We have US signaling interest rate cuts, 2 expected by end of this year and 3 more expected by end of next year. Overall, I think we're heading into risk on market, but in the short term, these trade escalations are definitely bad for markets. Although Trump has reposted that he's looking to negotiate and settle with China on these tariff threats. Actually, China escalated initially with their rare earth tariff, and so the US was responding to this, but I do think they can resolve this and we will be headed into a risk on market, I expect, before end of year. Central bank policies definitely affect FX volatility the most, in my opinion. You have interest rate setting, you have monetary expansion, quantitative easing, quantitative tightening. This is definitely very important for FX and FX volatility. Then you have economic data reports. So this is inflation numbers, this is jobs reports, this is retail trade, international trade numbers. And so these two are, I would say, the largest. Then you have geopolitical events, things like tariffs, things like trade wars, you have wars. And so combine these three, I would say, are the major triggers for FX volatility: central bank policies, economic data reports, and geopolitical events. In the medium to long run, the US dollar is softening. You have interest rate cuts coming, 2 expected before end of year and 3 expected by end of next year. So US dollar is softening. Investors globally are also looking at US dollar less as a reserve currency. You have other countries looking at other currencies to be their reserve asset. But in the short term, the US dollar has strengthened. You have these tariffs and you have US still seen as somewhat of a reserve asset. US dollar in the short term has been strengthening with a slight pullback, but medium to long run, I expect it to continue to soften. I expect Chairman Powell to continue to cut rates. He's already signaled up 2 more rates before end of year and 3 more rate cuts potentially next year. I don't think he'll deviate from this. US inflation is about 2.9% and you have interest rates of 4 to 4.25%. So there is definitely room to cut interest rate, and I think this is very important for the economy to stimulate more risk on investment. And so I don't expect him to deviate from this. If he does deviate from this, this will be a shock to markets. There was $20 billion in crypto liquidations on the 10th of October, and this was triggered, in my opinion, by a short squeeze, which resulted in a cascade of liquidations. This was a group of investors that shorted some major cryptocurrencies, which resulted in a depeg of certain assets, which resulted in cascade liquidations. And so I think this was a short-term impact. Medium to long run, I'm very bullish on crypto. I think Bitcoin will hit 150k to 200k before end of year, and so my medium to long-term play doesn't change. But short-term, there has been a lot of volatility. Bitcoin could go slightly lower, but I do expect it to recover before end of